this is basically the quarterly AI, update. I do this every quarter since we launched the AI portfolio just about 1 year ago. And it's basically a way for us to not just give you an idea of the performance of the portfolio, but also give an idea about what's happening in AI across the world, primarily the US, quite frankly. That's where most of the stuff is happening. And at least give you an indication as to what you can expect, even as just an economic actor in the world, what's coming up and what, might affect you and your investments, etc., or you and just your normal life going forward. This is a lovely quote from Ray Kurzweil. Artificial intelligence will reach human levels by around 2029. Okay, that is in 4 years' time. That's about. Follow that out further, say to 2045, and we'll have multiplied the intelligence, the human biological machine intelligence civilization, a billionfold. Now, this sounds like a really, extreme kind of person talking about, the singularity, as it's often called. Some people call it nerd nirvana, however. The thing about Ray Kurzweil is he made this prediction a couple of decades ago, like in the 1990s. Some people say Ray Kurzweil has basically figured out how the world works. And hi, John, question? You can put a question in the Q&A if you want to. I can't see your question any other way. So Q&A or the chat, either one of the two, John, and I'll answer that. So Ray Kurzweil basically came out with this whole thing about AI, and he gave a timeline that was pretty close to what really happened, okay, or what really seems to be happening right now. And the reason for this is quite simple. It is because he basically looked at what's been happening with regards to, I'm just trying to get this thing close. Give me a second here. To Moore's law, which is basically how fast we are seeing computers, progressing in terms of performance. He just kind of used that Moore's law and looked at a point where he thought it might approach human level complexity for a machine. And he got around 2030, 2029. And he did Moore's law for another 15, 16 years beyond, and he said that looks about 1 billion, okay? And that is pretty much what he did. Now, the amazing thing is that it's kind of working out like that. Yes, we're still 5 years away from 2029, but on current paths, we are looking to get towards those levels reasonably soon. And the thing I want you to understand here is that when I launched the AI portfolio, I said, we will know if there's a bottleneck. And the thing that makes this portfolio not work is that there's a kind of like a bottleneck or a wall that we hit, and things are not going to move at the same pace thereafter. The question arises then is, are we at that bottleneck? Are we at a point where we are seeing things slow down? And the answer is no. Not only do we have technology improving, do we have Nvidia coming out with better and better computers, the amount of money flowing into this particular thing has gotten to greater and greater levels. We'll talk about it in a bit when it comes to Nvidia and so on. But the things you consider is the following. Microsoft, the company Microsoft, which is, by the way, the most valuable company in the world, okay? It's more valuable than Apple. Microsoft is going to spend more on AI per year for the next 2 years than any government or any country or any institution in human history has spent over a 2-year period on any infrastructure project. I'm talking about going to the moon. I'm talking about building the US highway service. I'm talking about, any kind of infrastructure project by a government, these big, massive institutions. Not a single entity in history, a government or company, has ever spent this money over 2 years to build any infrastructure ever. And what are most of the money going towards? It's going towards building something called Stargate, which is going to be the world's most powerful supercomputer. Now, the way you know if something is true or not is by looking at people that have inside information and what they're actually going to spend their money on. So if you see some people saying, no, this place is going to fall apart and it's going to be destroyed, but they still are living in that place and they're basically investing and buying new stuff in that place, we don't believe them. On the other hand, if someone says, hey, this place is falling apart, and they basically are selling their houses and they're taking losses and they're getting out of the place, You might believe them. You might especially believe them if they somehow have information that you don't have. Okay, nobody has as much information or more information than someone like Satya Nadella. Nobody in the world. He has Microsoft. He has a huge chunk of OpenAI. He has, basically partnerships with most of the AI companies out there outside of Google. And he decided to take his company's money and spend more money than any other company had in history over a 2-year period, doubling down or tripling down, however you want to talk about it, on AI. Okay. Then you look at someone like Sam Altman. Sam Altman, head of OpenAI. Now, who is Sam Altman beyond OpenAI? He was the head of Y Combinator, YC. Y Combinator in basically Silicon Valley, in that kind of region, is basically the premier startup, incubator company. So he has a lot of power. He was a billionaire. He started spending more and more time on OpenAI, and the guys at Y Combinator came to him and said, you have to make a choice, OpenAI or Y Combinator. You can't do both. This is just too much of a drain on your time. He chose OpenAI over being in Y Combinator. And Y Combinator, like I said, is the premier startup firm in all of Silicon Valley and probably the world. It's not just incredibly lucrative, it's incredibly prestigious. The head of Y Combinator is automatically seen as a very prestigious, a very important role in the tech ecosystem. Then you look at, for instance, Elon Musk. Okay, Musk obviously has Tesla. Musk has SpaceX. SpaceX just launched and landed a Starship, which is, if you see what a Starship like launch and landing looks like, it's basically a skyscraper going to space and landing like you see on science fiction. It's an incredible achievement. Starship is, I think, SpaceX is probably valued at in excess of $200 billion, sorry. Tesla, is like $700 billion as well. And what is he spending most of his time on now? XAI. He's an AI thing. In fact, he's actually diverting resources from Tesla to XAI to do this particular investment. So what I'm saying to you is right now, all the people that would know more about this than anybody else in the world are not only saying that this is the most important thing they've seen and they're focusing their time on it, they put their money where their mouth is. And that is something to be, taken into account. Okay, so I've used this thing before, but I thought it was worth looking at again. This is a model of human progress over time. And we are the little dot at the bottom over here. And we are about to hit an exponential period in human history. It does seem to be. And in that period, things that were science fiction 5, 10, 20 years ago are going to be realities. And we're going to be accepting just what the world's looking like. Okay. Now, in this particular thing, what we're going to discuss is the following. Our agenda is going to be a review of the last quarter. Just to give you a brief idea as to what's happened. Sorry about that. Oh, sorry about this. Okay. A review of the last quarter. Then we look at hardware. That's chips and robots. And robots are real, by the way. They're coming about. You don't believe they're real. That there is actually a lot of money going into robotics right now. And it's not a lot closer than you think to being a real, product you can be buying. Okay. Then we look at the software sector, which has been dominating things. GPT 4.0 and GPT 5, that's basically OpenAI, and Google. But we'll also talk about some other things out there as well. Google's other bets are very important. And in fact, the one change we did this last quarter, one significant change we did this last quarter, was actually related to Google's other bets. Then we do a bit of scandal and gossip. When any field becomes this popular, when there's so many things happening, there's a lot of scandals, a lot of issues happening, and we'll just cover a few things so you know what's happening in these companies and so on. And then we'll go with the actual portfolio changes we made. And so you can see what was done in the last quarter and how the performance has been. And hopefully by then you'll understand why we did the changes we did. Okay. So quarter in review. Over the last year, since we started this particular enterprise, we've grown just over 16% in US dollars. Okay. The initial, what's happening here? I don't know what's happening with this machine today. Sorry about that. Okay. So we had a period when we first got in, obviously, that the markets were a bit negative and we lost a bit of money, but we've been consistently positive since then. And, we're now about 16.5% up from the time we started. We've outperformed our benchmark. Our benchmark, by the way, is the S&P 500 equal weighted tech index. So we're not like, benchmarking ourselves against something, for instance, like this GSE or, inflation plus a bit. We're benchmarking ourselves against the tech sector itself, because this is a tech, portfolio, and we need to be compared to the tech sector, to say that we are doing a good job or not. Okay. And the overall sector did about 15, we just done about 16. Like I said, obviously there's costs involved in initially starting up and stuff, and so that has to be factored in. But once those things were overcome, we are now going up quite consistently. And like I said, I've overtaken the benchmark by a few percent. Okay. Sorry about that. Damn it. Okay. Now the hardware sector. So things to look at first. Nvidia chips. Nvidia is a $3 trillion company, just passed $3 trillion in the last day or so. It's more valuable than Apple. The number one company, by the way, is Microsoft. And much of Microsoft's gains of the last year have been driven by AI. So the top two companies in the world are AI companies. Okay. Microsoft, you can say, is not quite as heavily focused on AI because it had a big business before that. But much of the growth that made it number one has been related to AI. It was the investment in OpenAI that started the rally up. Nvidia has seen huge growth in terms of its stock price. It's bigger by now than the entire UK stock market. The entire FTSE, okay, is smaller than just Nvidia itself. And this is from being a company that's worth, a fraction of this price, say 10 years ago, 5 years ago. Jensen Huang, the guy that runs Nvidia, is now one of the richest people in the world. He still owns a significant share of it. And I think that if this continues any longer, his leather jacket is going to be as iconic as Steve Jobs' black polo neck. Okay. In terms of what Nvidia has done over the last 3 months or so that I think you might want to be looking at, is that they are looking at separate training and inference lines, Rubin for training and Blackwell for inference. Now, what you must understand is how AI works, okay? So those that have not followed this before, have not heard this before, it's quite simple. To train an AI model, you require unbelievable amounts of energy. We're talking the newer models are going to require probably an entire power station worth of energy. Microsoft's, Stargate system that they want to create is going to approach something like the Hoover Dam, which is one of the biggest, power generators in the world worth of energy. At current rates, by the time we hit 2029, 2030, like Ray Kurzweil was talking about, individual data centers that are running an AI system or for training an AI system will be drawing more power than entire, medium-sized countries the size of Belgium and New Zealand and so on. One data center will be going towards doing that power for that. So in terms of training, you need these very, very high-powered, very, very powerful systems taking a lot of energy and running for months and months on end. So you care about things like, for instance, speed. You care about, computing power. That's more important than anything else when it comes to these systems, because we've got months and months of training to do here. If something is like half as fast, it's going to take you twice as long. It's going to take you 1.5 years as opposed to 8 months. So big difference in terms of, performance. In 1.5 years in this particular thing, or 8 months in this particular industry, could get you from being the top dog to being nothing in the race. So speed, power matters more. But once you have the system trained, it takes a lot less power to run that system. Okay, you can run some of the middle level systems right now from Meta and so on, which are not at the same level as OpenAI's best system, but it's very good. Okay, very useful. You can run that on a PC that an average individual can afford to buy. Not a cheap PC, by the way, but you could afford to buy. There's not something where you can't. There's no one out here who can afford $100 billion machine. That's like insane. So, there's nobody out here that's going to be able to afford $1 million machine. but a $10,000 machine, it's tough, but you can do that. An actual person can go out there. And those things can run some pretty sophisticated models. When it comes to this thing, it's more about cost, it's more about speed, it's more about cost of energy, etc., than it is for the training models. If you get to a point where it answers you as quickly as a human being would answer you back, you're as fast as you need to be. You don't know if you were 100 times faster, it would make a huge difference to the performance here. Whereas with, for instance, the inference model, the training model, where you're creating the thing, if it was 100 times faster, it makes a huge difference to the actual value of the product. So the inference lines are more about being as fast as needed, being very energy efficient, being very cheap to produce because you want to get it in the hands of individual people out there. And the training model is more about power and speed. More power, more speed, the better. Okay. And what NVIDIA is doing right now is it's separating that into two different lines. Okay. Next. Sorry. Okay, AMD chips. AMD is, I like to say, it's like a third of the revenue and a tenth of the price. Less than a tenth of the price. It's like a little bit more than a third of the revenue and less than a tenth of the price of NVIDIA, not AMD, sorry, versus NVIDIA. So we are looking at a possible, bargain, if you can use those terms in the space. Now, what would be against it? Well, we are in a race. This is not a case of we've hit a target and we're just going to expand what we have outwards. We are still on an upward trajectory, okay? The example I'd use as a counterexample to NVIDIA would be something called Cisco. Cisco did routers. And when we had the internet revolution starting off in the late 1990s, everyone was saying, who needs these routers? What do you get the routers from? And blah, blah, blah. It was Cisco. And Cisco became an incredibly valuable company and then crashed thereafter as it was no longer as needed. And what was the difference between Cisco and NVIDIA? And why would you say NVIDIA wouldn't follow the same pathway? But what Cisco did was it built routers, but routers are not the absolute pinnacle of human technology. If China wanted to build routers, they could. If India wanted to build routers, they could. It wasn't like a super difficult technology to build. At the moment, however, what NVIDIA does in terms of the chips in combination with TSMC, the whole of China cannot do. The Chinese government would love to do it, but they cannot do that. It's too sophisticated, it's too complicated, it's too difficult to achieve that technical task. So that's the one thing. So NVIDIA's lead is not just about being the first mover there. It's also having a technological advantage that the other guys don't have. And to get to that point, it's not going to be something that anybody can just match up with. There's going to be maybe 2 or 3 companies out there, if that are going to be able to do what NVIDIA does. Okay. The second thing is that when you have routers out there, what happened very quickly was that the need for these routers kind of dried up, because once the infrastructure was built up, it took some time for the internet to catch up with the built-in infrastructure. Things like, for instance, streaming, things like, for instance, YouTube and whatnot. That was the stuff that was required to take full advantage of NVIDIA's, of Cisco's routers that they create, this infrastructure they then built out. That took a few years to really come into play. And in that meantime, demand kind of stabilized and dropped off. Because once you build the route from like the US to China, or from London to New York or something, that's built. And unless there's more demand for, so bandwidth required, we don't really need to keep on building that again and again and again. Whereas with regards to these AI programs, AI source chips, the more you have, the more important, the more you can do with it. There is no, at the moment, cap in terms of what we think we can do with the current technology if we just had more computing power. I saw recent statements from people from Google, for instance, come out and say that if you doubled the amount of computing power they had, they could pretty much guarantee that the new system would be at least 30 to 40% smarter, just because the computing power doubled. Okay, it may not be a 1-to-1 ratio, but it is a significant improvement, would double the amount of computing power. And that would indicate that as NVIDIA or AMD or whoever it is making more and more powerful chips, demand will keep on rising with the more powerful chips. It's not going to be a case of, oh, we need this amount of computing power, and once we achieve that, we're not going to need any more computing power. Right now, it seems to be that the more computing power we have, the more people are willing to buy. Okay. However, one thing AMD does do that is quite interesting is that they have done a deal with Microsoft for their Microsoft's AI PCs. And what that means is that maybe they are not focusing so much on training, but more on inference. And that might be an advantage because, like I said, the inference machines are different from the training machines. The training machines that build the new computers, they are the most powerful, fastest things you can get out there. The inference machine, as long as it can communicate to you as easily as the human being is, that means when you talk to it, there's not a 1 minute gap between the time you talk to it and it answers you, but it answers you in a kind of like maybe a couple of seconds later. As long as you get that level of speed, it's fast enough, okay? And then once you can do the calculations for that particular level of model, it's uh, my can you sorry about that, can you just confirm if you hear me or not? Oh, can you guys hear me? Okay. There's an issue here, please. Okay, let's come up here. Let me just see this. Okay, Andrew, thank you. Okay, so when it comes to these machines that are not as at the upper level, thanks, Sean, of technical ability, but rather good enough to run the model at a speed that's fast enough that you don't feel that there's a weird lag between the time you ask it a question and the time it answers you. Well, quite frankly, there is an opportunity out there that I think is important. And now, why do I say that this inference stuff is important? Well, you should take these huge data centers, maybe $100 billion data center, and you train up the system. And then you run it on a $5,000 or maybe $1,000 machine. Okay. There's going to be one of these, or a few of these big $100 billion data centers that you train up, or this supercomputers you're training up on. But there's going to be billions of those $1,000 machines that are inferring based on that training setup. Because, like I said, the thing used to make the thing is not the same thing you used to run the program. The thing that used to make the program is this high-end training system, like I said, requires a critical power plant to run. The thing that you need to actually run this actual program that you create in the end of the day is much smaller and has slightly different needs. And AMD looks to be going towards more of the inference side than the training side. And so I think in the long run, once we have models that are truly useful, probably GPT-4 is not quite there yet. GPT-5 may get us more close to it, and probably by GPT-6, we're going to be in a situation where it's going to be very important to look at inference. You might just see a bit of a switch around from being focused more on the companies that build the stuff that's used to train to the companies that build the stuff more used to infer. Okay. Then Tesla. In terms of Tesla's robot and chips thing, look, there's a lot of stuff happening here that's very, very interesting, let me say. Firstly, Tesla has its own program for computer chips called Dojo. Now, they still seem to be working on that, but I think they are also looking at NVIDIA orders as well. And they're saying they're going to do about $4 billion of orders from NVIDIA over the next year or so. And in fact, this is one of the scandals we'll talk about later, where Elon Musk, because he started as XAI, may be diverting some of the chips from Tesla over to XAI. And why is this important? Because he does not own all of Tesla. He runs the thing, but he doesn't own all of it. And if he's basically taking stuff from Tesla and moving it to somewhere else, that's going to be something he does own more of. Well, that's like stealing from the company, quite frankly. You can't go and basically work at Checkers and then start a tuck shop next to it and start taking stuff from Checkers and selling it at a tuck shop. That's just not going to be working. And so that is a major issue, okay? But that being said, he's still focused on Optimus. Full self-driving, he's taking significant steps forward. Look, it does seem that some of the new technological changes he's done over the last, I would say, 6 months or so, have really made a difference in terms of what full self-driving looks like right now. And it's pretty clear that if this kind of progress continues for even another year or so, we're almost going to be at a point where self-driving is the thing, which totally changes how the world works. I think that, obviously, there could be slowdowns in performance. We could hit a wall. That's still a possibility, but right now, it doesn't seem that's happening. And so self-driving is coming through. And then China is making serious efforts in China. And this is what the problem, I think, might come down the line. It's pretty clear right now that the Biden administration is trying to strangle China's access to this high-end technology. Tesla still has a lot of exposure in China. And it remains to be seen whether the Chinese government is require technological transfers not to allow them to continue to operate in China, and what Tesla is going to be willing to basically pass on to the Chinese, especially in the light of the fact that, like I said, the US government is saying, no, China is more of an enemy than it was a few years ago. We don't want to give them the best technology we have. On-device AI. Okay. So inference, I think we talked about. Microsoft has come out with an AI PC, and it claims that a lot of the inference for that PC is going to be done on the machine, is going to be done on the PC, not on the cloud. Why is it important? Well, the use case Microsoft put out for this AI machine was, what it does is it looks at your screen, the computer screen, and remembers what it saw, and then allows you to refer to those things and ask questions about it. Think about that. Think about what that means. Imagine I had a program on your computer, the one that you do your business stuff on, the one that you write your personal emails on, the one that you receive your bills and your tax returns and do whatever else you do on your PC. And then I was looking at every single thing that came across that screen. And then you could go and ask it questions about everything across that screen. Now, that's a very, very high level of exposure that you bring out there. That's an incredibly difficult decision to make, because, quite frankly, a proper AI system that could actually do this properly and see all the stuff that you're doing could help you significantly in your job or in your life. You could ask it questions like, when's my kid's birthday? What does she like? And it'll have these answers because it has access to everything. It could also be, what does the guy make this year? What's his bank account details? What did he spend his money on? What is this thing that he spent on this particular day that looks like he was in the company of some person that's not his wife or something? That's also, quite frankly, available through something like, for instance, this particular program. Now, if you're going to have a machine that's going to have, also a computer program that's going to have that much access to your personal information, putting it in the cloud is going to be, I think, a tough decision, a hard decision to make. Yes, you are going to be in a situation in which the difference in your life, it would be like having a great personal assistant, okay? Unfortunately, you don't want this personal assistant to blab all your secrets to everybody in the world. The solution to this is to have that personal assistant work within your computer, not have access to the cloud, not transfer your data elsewhere. So you basically only work on stuff relating to your system, on your system, okay? Which means that you would have to do the inference on your machine, not somewhere else. So I think that is an incredibly, important use case. I, quite frankly, if this thing does become available, would go for the on-system, thing, because somebody could easily, if they had access to this particular, login for my personal AI device, know everything about me. Know my client's details, know my details, know my bank account details, know where I spent my money, know where I invested my stuff. That's a high level of lack of privacy that we're talking about. And so if you can afford it, you'd probably want to go for this, AI PC or AI on the PC kind of thing. The second thing is that you could make it more customizable. If you basically have a machine that's on your computer, you can also a program running on your computer, you can be much more, powerful in terms of actually deciding what to do with it and how to work it. And the final thing is ethical and legal considerations. Now, let's just say it does run on your PC. Let's just say you're accused by the government of committing a crime. What happens if the government can ask that PC about your particular life, your particular, history and whatnot? It's a computer program. Will answer whoever puts the prompt in. Is that going to be illegal? Is it going to be the same as basically self-incrimination, where you're not, you and I think your wife are not required to self-incriminate you. They can't ask you a question in the US, for instance, which requires you to answer in a way that will make you go to jail. You can just always say, I plead the fifth in the US. Maybe not to other parts of the world, but it's a kind of like a thing out there in the US especially. If you have an AI system, that AI system will know as much about your life as you do almost. Is that going to be something that the government can question? You obviously have rights when you are questioned. Do you have rights to have that machine, not divulge everything about your life to government? These are the kind of questions that are going to be more and more important going forward. Robots are coming. Robots are in fact here. So we're in a situation right now where $16,000 will buy you a 4 foot tall, that's about a 1.2, 1.3 meter tall robot. Okay, size of probably a child, like a 10-year-old, 12-year-old child. Okay, for $16,000. That's roughly 300,000 rands. Okay, that's not expensive. I would suggest the majority of you guys own cars that are more expensive than that. And remember, this is a robot that's not gone through the same kind of, costs, economies of scale or cost reduction you'd see in the car industry. There's not bigger factories building this thing at the cheapest possible cost just yet. Had you done that, I would suggest probably the cost would be close to 50,000 rands, maybe even lower than 300,000. And these are currently out there right now. What's holding them back is the software. It's not the hardware. Once you have a system that can understand physical AI with a chip that can do inference in that system, implanted into one of these 4 foot tall robots, they're ready to go. The robot can already do everything you need it to do physically. It's just that the brain isn't there yet. Okay, and so as soon as the AI system gets to a point where that is there, well, that's going to be working. Non-human robots as well are getting more and more sophisticated. So they are, I've seen, for instance, drones, the ones that fly, with little kind of like bird legs. They can perch on top of a power line and draw and charge from the power line. That is incredibly, both exciting and obviously troubling as well. And just to give an idea as to how far along this is, Amazon has got an FAA. That's the Federal Aviation Agency, the people that control flights in the US, approval to fly drones out of line of sight in the US. So that's done by humans for now. But if the AI gets to a point where it can do that job of that human, you're suddenly going to have delivery drones from Amazon, all over the place. And Amazon won't be the only company that can do that. There'll be, delivery from supermarkets from everywhere that you can imagine. And it's going to be a totally different retail space than we experience right now. So these are the 3 big things happening in robots. It is humanoid robots, much cheaper than you thought, and going to be cheaper in the future because we haven't even exploited economies of scale yet. Non-humanoid robots getting more and more interesting. I mean, I'm sure you all by now have seen the video of the fire-breathing dog. And then also regulatory moves have happened behind the scenes that make them now illegal to operate these drones, etc., in crowded spaces. And I think that's going to be something that's only going to get more and more important going forward. Okay. With regards to GPT-4-0, again, it's more towards the inference side than to the training side that this is happening. It's more about speed. It's about lack of, the quickness of responsiveness, as opposed to, just pure raw power. Speaking of pure raw power, they are now trading GPT-5. Okay, GPT-5 started trading just recently. Normally, we'd expect 8 months from the time of training to when we have the program basically out there being, refined, and then maybe about a year or so where we will see it, which kind of puts the first time we're likely to see GPT-5 to the start to middle of next year, which is slower than we thought. We were hoping to see GPT-5 by this year. Now it's been pushed back till early next year, or maybe middle of next year even. This is one area of concern that I have to point out to you guys. In terms of the signs you'd see if there is a wall being hit, it's a bit of a slowdown in terms of new programs coming out. And look, this is not like a massive slowdown. Instead of being like, say, 2 years, it's 2 years and a few months. That's what we're looking at right now. But it's still slightly slower than you would have thought, and therefore it's a worrying situation. That being said, that's not the real test of whether or not things are going to be pretty well. The real test is whether the new thing that comes out is significantly better or not than the old thing. To give you an idea, if you look at GPT-3 versus GPT-4, GPT-3 was kind of like a toddler, like a 3-4-year-old kind of its ability. GPT-4 was closer to a high school student in terms of ability. So that is the kind of jump we saw there. We would now need to see, if for GPT-5, something closer to a graduate student in terms of ability. Someone able to answer questions a graduate student will be able to answer. In certain areas, be a world expert on. And I think that is what we'd expect from GPT-5. If it comes out and it's just slightly better than GPT-4, even though they spent a lot more money on it, and they took a lot more time and there was no technology applied to it, it would significantly cause a worry for those that are optimistic with AI, because it would indicate that we've hit some kind of wall. And it'll be much more difficult to basically get the kind of money we're talking about in order to get to the next level. Then if, for instance, the next GPT comes out and it's significantly better, it's like, wow, this is so amazing. Next, paying for data. It's now becoming clearer that if you don't pay for data, you're going to be sued. And given the kind of money that OpenAI and all these other players have here, they're starting to pay for data. What sort of data? Well, they're paying for things like, for instance, the Wall Street Journal, for Reddit, and so on. And look, from the point of view from Microsoft to OpenAI, 60 million here for the Reddit, for 250 million for, I think, the Wall Street Journal and some of the other products out there. That is a lot of money, and especially for these companies, like these content companies, like $250 million is a lot of money. To Microsoft, the $3 trillion company, $3,000 billion company, this is like 1/100th of 1% of the value of the company that they'd be spending on this. So yeah, so we are looking at a significant rise up in terms of the spending on, like I said, data and licensing things, but not really materially significant, at least not to the AI companies. Maybe materially significant to the newspaper companies, but not to the AI companies yet. And here's what I want to pay more attention on. This is Google. Now, the thing about Google and Alphabet, the parent company of Google, is this. It's the other bets. AI was created at Google. What does that mean? The software, the formulas that they used to basically, create AI were done first by Google, okay? That means Google effectively is the source of all the stuff that we are basically talking about right now. But what they did not do, they did not go all in on monetizing what they had made. They kind of published it for free and said, oh, here's something wonderful we made. Do what you want with it. That seems to be changing. They've launched something called Isomorphic Labs. Over the last month or so, Google's come out with something called AlphaGo 3, not AlphaFold 3. AlphaFold 2 solve what's called the protein folding problem. Now, what this means is that you have a string of like proteins that they kind of like crumple together, like, like string, okay? They fold together. Depending on the formula, the folding is different. It's like, like there's a way to determine what the patch of folding is from the formula you have. Until recently, actually determining the structure was worthy of a PhD thesis. If you could go and do one of these things here, you would be getting a PhD in, in your field, in biology, because it's quite a difficult thing to do. Then comes AlphaFold, and it does all of these, AlphaFold 2, sorry, and it pretty much solves this problem for all of biological matter. So every single known, protein out there, they pretty much figured out how it folds, and they have a thing that did that. Then they came at AlphaFold 3, sorry. What AlphaFold 3 does, as opposed to AlphaFold 2, is only does look at the folding of that protein. It looks at how it interacts with other smaller things as well. And why is this important? Because if you just know that things fold, you know how to create something. You know how it interacts, you know what that thing does as well. So you can imagine now you can basically look at any formula and say not only what does the protein look like when it's folded, you can say what the protein does. And if you're creating things to do certain things, for instance, attack the disease or, like kill a virus or whatever it may be you want to do with it, now you have that ability to actually do that. There's very few sectors in the world that can justify having a company in it for $2, $3, $4 trillion. The one sector that can handle this with ease is healthcare. Generally, healthcare is not as much a monopoly as some other sectors out there, and therefore you don't get those really huge companies, $3 trillion companies there. But if you have a program like AlphaFold 3, that is something that you can really, give you an advantage when it comes to actually developing new drugs and so on. And therefore, if you have a company that has AlphaFold 3 or access to it, it's probably going to be more valuable than the companies that don't. And that's one of the reasons we did what we did right now in terms of rebalancing the portfolio and adding these pharma stocks. That's the pharma bets that we put in. And something else that Google has is something called GNOME. Now, what does GNOME do? GNOME gives you stable materials. What does it mean? Like you can use elements to form alloys, materials, whatever. Some of the stuff stays stable, some of the stuff doesn't work, doesn't stay in the stable form. Now, with GNOME, what they've done is they've taken the number of known stable materials that humans have developed for all of human history and gotten 10 times more of that. If you think to yourself, materials doesn't sound that important. Let me tell you how important materials actually are. We name entire epochs of human history on it. It's the Stone Age, it's the Bronze Age, it's the Iron Age. What's stone, bronze, and iron? Those are materials. Okay, we now probably live in the plastics age. Plastic is a material. We basically had a selection of materials we could use to build a bridge, to build a space station, to build a solar panel, whatever it may be. We had these materials. And then Google comes out of GNOME, and now we have 10 times as the number of materials we had in the past. Obviously, it's going to take time to develop all this stuff, but it's a huge thing up. So you step up. And you look at what Isomorphic's done with regards to its lab that's using AlphaFold 3, and they're monetizing it. You can easily monetize GNOME, probably more easily than you could monetize Isomorphic Labs. And by some estimates, the question about using AI to select stocks. There are people out there doing that right now, but you cannot get a hold of these guys. Nobody's going to give you, because I'll cover it in a second. I'll just finish this thing on GNOME and I'll cover it in a second. The number of values that you can create from a new set of materials is virtually infinite. If this works like we think it works, and especially if the newer versions that are likely to come out from Google, because Google doesn't just do one thing and stop it, usually just iterates and iterates. This could be a company on its own worth more than Google is right now. Isomorphic labs just with AlphaFold could be worth more than Google is right now, based on the kind of valuations you can get from it. So therefore, I do think that, these secret are the best that Google has. Makes it one of the most unique companies out there. Because there's very few other companies that sitting in a lab somewhere is $100 billion worth of value. And there's multiple of these things at Google. Now, coming to this AI selecting stocks thing. Yes, people are using it at the moment. Now, why we don't get into that, it's a couple of things. Firstly, this kind of stuff is usually very highly proprietary. And once you have this value out there, it disappears because other people will just, get away from it or basically, exploit it out of the market. Once there's a technique that's known and you know exactly how it works, you're going to lose that. Number two is the fact that most of the people that have this kind of advantage have very little incentive to actually share that advantage with anybody, even for money. Okay. Even if you gave them money to basically, do something for you on that kind of high frequency stuff, they make so much from what they have that it's not worth them doing anything about that. That is just like high frequency trading. But investing, no, I don't think that has come to the point yet. Investing from like value development, maybe you can do look at that. But investing in terms of like something like the AI portfolio, for instance, it's going to be very difficult for AI to do that because, like I said, it's a high school student in terms of level. Somebody that's done 6 or grade 8 or whatever you want to call it. It's not yet a graduate student, not a professional expert level at the moment. And I think that's probably where you want to look at in terms of selecting long-term stocks. Short-term stuff, trading, I think there is advantage out there, but like I said, the real people are not going to want your money. Others, Anthropic, Mistral, XAI. Now, XAI is Elon Musk's new company. That company basically raised $6 billion to buy computer chips, etc. That is the biggest fundraising round for a company of that level of development in history, by a factor of 2. Gives a valuation of $24 billion for the overall company. That's about a quarter of the valuation of OpenAI. Mistral, that's the French company. I think it's made some interesting things, but I don't see it really having breakthrough stuff right now. It's more like keeping up pace with what's happening over at, like, for instance, Anthropic or for OpenAI and so on. I don't put Meta here because there's nothing from Meta that's been particularly new since Llama 2 came out. I don't think that Meta is staying out of the game. They're getting it more and more advanced. My only question with them is that are they going to be willing to carry on with this whole open source stuff that they're doing? The general rule is that people that are behind open source, the people that are ahead closed source. Let's see what happens. And then there's Anthropic. Anthropic, for those that don't know, was a split up from OpenAI, but people that thought OpenAI was not being responsible when it came to AI. And the next segment on scandals, I'll tell you exactly what that we think of that. Scandals and gossip. OpenAI was a source of a huge amount of drama this last quarter. They thought it was bad last time around. We looked at, for instance, that firing of Sam Altman and that kind of stuff. No, it's gotten worse. The first thing is that one of the board members that we had on OpenAI came out and discussed why they wanted to fire Sam Altman. And basically, they found it to be a deceitful person. They thought that he was a liar. They thought there was numerous cases, none of them particularly in their own, important enough to do anything about it, but overall showed a pattern of lack of integrity. And they said that, that's why they looked to fire him. They mentioned the fact that when ChatGPT was released, the board was not even aware of it. That's been the non-executive part of the board. Half the board is like people like that were working at OpenAI, like Elias Skaya and like Sam and so on. So they knew definitely this was being released. But half the board was not. Half the board was basically independent people. And they did not learn about the release of this new program until they saw it on X or Twitter, whatever you call it. So Sam obviously has some issues. And this kind of translates over to a couple of things. For instance, there's a scandal right now around OpenAI's share policy. So when you have these startup companies, generally they pay people a salary, but they also give them shares. So they have an incentive to, for the upside. They want to be incentivized to basically make this company as valuable as possible. OpenAI, in their contracts, have a special clause that says if you leave this company and you do anything that we deem to be disparaging against the nature of the, or name of the company, we can revoke the shares that you have. How important is this? For some people, these shares are not just more than half, they're the vast majority of their net worth. One guy said that his shares accounted for 85% of his net worth. Everything else he had was 15%. And these shares were worth basically almost 6 times as much as everything else he had combined. Now, if you want to make a statement about either the legality of Sam's work, or about his competence, or about his like lying or whatever, or about the attention OpenAI is to pay to things like safety and so on, if you're starting to lose 85, 90% of your net worth, that's a lot of money to lose. Like, even if you are well off, it's a lot of money to lose. And that means that we are in a situation where people have kind of held their mouths shut because of the fear that they will lose out on these tens of billions or millions of dollars worth of grants and so on that they have gotten in OpenAI. And here's where the weird stuff comes out. Sam Altman comes and says, oh, no, this is not true. Oh, in fact, this is a mistake. And this is one of the few times I'm ashamed to be the CEO of OpenAI. So he says, no, this particular clause that only benefits us and nobody else, this wasn't meant to be there. You know, one can imagine what actually happened was that it was leaked that this was the clause, and then he's now trying to damage control around it. And finally, safety. The entire team of people that work on safety at OpenAI has quit because they no longer trust Sam to basically proceed safely. Like I said, there's a number of different indicators coming out that kind of speak negatively about Sam Altman's character, which makes me wonder if basically the same thing had happened now, where he had been fired now. In all likelihood, there would not have been that OpenAI is his people, or the support from places like Microsoft and so on that we saw last time he was fired. He's definitely fallen down in terms of public perception about his ethics and so on. And beyond that, speaking of GPT-4 we had earlier, this I think is not as indicative of his lack of character or whatever, but it just kind of like hurts you that when people do think you lie about one thing, they think you lie about everything. It turns out that there's a voice on GPT-4-0 that is maybe similar to Scarlett Johansson's. I personally can't hear it, but it just basically sounds like the same kind of age woman from the same kind of area in the US talking. It doesn't have any inflections or whatever that I would think are unique. But it turned out that he approached her before this to do this voice. She said no, and then suddenly the person doing the voice sounds a little bit like Scarlett Johansson, which is illegal. Scarlett Johansson, which is illegal. So right now he's under a lot of pressure about his integrity, and I think that is pretty fairly valid, because this, especially the share stuff, really goes to show that what he's saying in public is definitely what he's not operating like in private. Next, Elon Musk. Again, like OpenAI, always a source of entertainment. Now, like I mentioned, Starship just had a launch today to be successful. Excellent, work on that part. But X versus Tesla. So right now, Tesla is having a vote as to whether or not to pay Elon Musk the salary they agreed to pay him, 5 years ago. Now, from my point of view, this is a ridiculous thing for them not to pay him. Why? He came to them with a deal. At the time the deal was offered, everybody thought the deal was insane. He would not get paid unless he doubled the value of the company. So only when he doubling the value of the company was when he would start getting paid. But if he did double and more than double the value of the company, that pay would escalate over time. And he took the company value not 2 times up, but 10 times plus up. And therefore he had certain targets regarding how much shares he could basically buy at a cheaper price from Tesla that he hardly owned. He achieved his targets. He made a deal with people that it's pretty clear they understood. He achieved his targets. Then some guy with 9 shares, okay, in conjunction with a law firm that's currently suing for $5.5 billion in legal fees, comes about and with a judge that does seem to be anti-Musk in a pretty clear way, negate that deal. Now, the vote right here and right now is to kind of bring that deal back into play. Because people said, okay, no, they weren't fully informed about the deal, and that's why they had to vacate it. Now, there's no excuse because now there's more information out there and they can decide whether to make the deal or not. But here's the thing. Musk doesn't have one company, he has multiple companies. And one of the companies he just created, XAI, is in direct conflict with Tesla. It's such a conflict that what he recently did was he asked for XAI to be given a higher priority than Tesla for NVIDIA chips. Why is this important? Because when you basically are the head of a company, you should be looking only for the interests of that company. You can't be out there doing something that's going to harm your company, especially if you're looking at a situation in which you are actually taking from Tesla to give to XAI. The people that own Tesla, the people who own XAI are different people. Even though Musk is a common character, there's some people that own Tesla and there's some people that own XAI. If you take out Tesla and give it to OpenXAI, you take it from the people that own Tesla and give it to the people that own OpenAI without paying for it. That's theft. And that is a major issue, I think, that's going to be an issue going forward. Next, China, like I mentioned, issues in China that are becoming more and more difficult, especially when you consider the fact that the US is at the moment in a pretty negative fight with the country. And then a combination here, a fight with Jan LeCun and no fight with Zuckerberg. Jan LeCun is the head of AI over at Meta/Facebook. And he and Musk have been engaged in a Twitter fight for the last little while about, the validity of AI and et cetera, et cetera. And with the no fight with Mark Zuckerberg, Elon Musk and Mark Zuckerberg were supposed to fight some kind of MMA fight, mixed martial arts fight. That was a big story last year. Haven't heard much about that recently. Okay, here comes the meat and I think of the portfolio. This is what we've done in the last quarter. ETFs out. Why? These ETFs were primarily put in there to give us exposure to smaller companies and kind of make sure that we had exposure to something that might just go crazy that we didn't currently have in the main portfolio. Over the last year, it's become pretty obvious a couple of things. Firstly, scale matters. The biggest companies are currently the ones that are doing what we consider the cutting edge work on AI and reaping the big benefits from it. You're not having a couple of million rand startup, $1 million startup competing here. That's just too difficult. The next thing is that we are in a situation right now where the technology is changing so fast, right? That these ETFs that we are looking at in terms of investing for AI, some of them are based or were created before the latest tech became the real big new thing. So now we don't basically see the correlation with the scene in these kind of ETFs versus the AI sector, because the ETFs were not designed in the current AI sector. They were era. They were designed before that, and therefore doesn't fully reflect the things that are really doing well in the current era. Okay, so we've taken out our ETFs. They kind of been breaking even. They made a bit of money, but not a lot of money. But we were happy to take them out and then use that money to do the following. We've put in Eli Lilly and Novartis. One of the primary reasons for this is these companies have made a partnership with Isomorphic Labs. Isomorphic Labs, remember, is that company that's dealing with Google's other bets and trying to monetize them. Why do we choose it beyond that? I believe that biology is the next frontier for AI. What do I mean by that? I think that the next real big benefits you're going to get from AI are going to come from from biology, sorry. Not going to come from physics and whatnot, but from biology. Why? Because biology is more about a large amount of information and correlating it or collating it, in a simple manner. It's not about high IQ, small information. It's low IQ, high information. And that is something that AI right now does quite well. There's tons and tons. In fact, there's millions of studies out there on everything that we can think about under the sun. No scientist knows all of them. No scientist knows all the relationships, knows all the different factors and so on around all the millions of applications on medicine we have in the world. AI can know these things. But at the same time, humans can take, some solace from operating with regards to low information, kind of areas better than AI, at least for now. So things where, you have less information, you have wants of things, maybe something like physics and so on. Those things are probably going to last a bit longer. But for right now, it does seem that biology is the next part of science that's going to fall to AI. And in that scenario, you want to be in the companies that have that AI access, that have access to the AlphaFolds, that have access to this tech that Google has at the moment, in order to further grow their portfolios. Those that don't have these things are going to be losing market share quite significantly, I believe, quite frankly. Okay. And here's the portfolio performance. This is the full portfolio, start to finish. I'm going to go through all the shares that we have here and tell you why we have them and, what's been the performance of these shares. Okay, starting off, Nvidia, it's no-brainer, you know why we have Nvidia. ASML, they have done it's about 15% since we bought them. Nvidia is done 163% since we bought it, so it's done really well. ASML, done 15% since we bought it. These are the guys that make the machines that make the chips that Nvidia basically designs. Eli Lilly, we just bought it in the last couple of weeks, so they're only up 4%, but it's only for a short period of time. Meta, that's Facebook, up 60%, just about 58%. Lots of attention in AI, lots of money that they're putting into it, and they are one of the few companies that actually have made money already from AI. Microsoft, like we said, one of the biggest companies in the world, or the biggest company in the world, and very AI focused, done about 19.5%. Bit of a disappointment. Apple, basically flat since we bought it. But we can't not have Apple in the portfolio because Apple, at some point in time, is going to come out with something interesting, and we just have to be aware that it's going to be something that we're going to be, holding in the portfolio. Alphabet, like we said, Amazon, like we said, drones, lots of AI stuff that's happening around there, down 35%. Alphabet, like we said, a huge amount of hidden gems in our company, 46% up. And then come some of the losers here. So Tesla, down 36%. We cannot not have Tesla. We cannot eliminate Tesla from our portfolio. Tesla is the primary, property when it comes to physical world AI. Self-driving cars relates kind of to robots as well, because the car can perceive a space. A robot can perceive a space and operate within it. And I think that's important to take into account, that Tesla has, sorry. Okay. Yeah. Tesla has the undisputed advantage. Even Jensen Huang, who's basically the guy that runs NVIDIA, has come out and says Tesla is just miles ahead of everybody else. The only question is this going to be a problem that can be solved? If it can be solved, Tesla will be rallying up significantly. Okay, so if you have an AI portfolio, you don't have Tesla, it just does not make sense. AMD, the alternative to NVIDIA, we have that down 45%. NICE, it's an Israeli company, kind of bad news for the Israeli government over the last little while. We'll look at this closely and we will make a determination over the next couple of months or so as what to do with it next. Down about 20%. Oracle, it kind of makes sense how Oracle would work with regards to AI, just has not really turned out to be the case so far. The other thing that's also not worked out with regards to AI has been Salesforce. Also not really done as well as we would have thought so far, based on, preconceived notions about it. We're going to look closer at Oracle going forward, but it is something where, maybe some of the assumptions you made about how AI works is not going to be great. Andrew talked about robotics for surgery. Yeah, I think that's important, but we don't have an outstanding, advantage at the moment in terms of the AI, because I think that is where it's going to come about. Yes, you can take a human being having control a robot and have the robot do what you need it to do, but then you're still going to have that very expensive human being behind the scenes basically being paid a fortune. If you take the same robot and have it operated by an AI, significantly more valuable. Okay, like I said, Oracle, maybe some of the assumptions we made about how the world works isn't true, and therefore we would have to change Oracle, but still for now it's in the portfolio. Novartis, just like Eli Lilly, very new purchase, a week or two old, up about say 3.5% already, but I think it's going to be something that we want to keep a closer eye on going forward, but I'm happy to have it in the portfolio right now. Then comes a couple of Chinese companies, Baidu and Alibaba. In terms of valuations, these are cheap, far cheaper than any US tech company of similar size and similar profitability and so on. Unfortunately, with what's been happening with tech, and on some of the stuff happening in China, they've kind of been hurt. If you look at Alibaba, for instance, the revenue has gone up year after year, but the stock price has been dead for the last few years. At some point in time, that has to change around. Okay. And we cannot not have some kind of exposure to China in our portfolio just because there's only two places in the world that AI really is developing at any kind of reasonable pace. One is in the US, and the other one is in China. China's a couple of years behind, but it's further ahead than places like Europe. It's further ahead than places in South America or whatever. So you want to have those Chinese exposure, and it hasn't performed good till now, but I'm still happy to keep it on. eBay up 27%. This was a punt on some of the stuff around AI as well, worked out well. Intel down 7%. Like we talked about the fact that Nvidia up what it is, and of course AMD up like it is. It's a bit disappointing. We might look at whether or not there's a third or company we're going to put in there into Intel, but we haven't come to the decision yet. And then Palantir Technologies, they are a kind of like an information service for the government. And they have done 55% since we bought them. Okay. So yeah, that is our portfolio. As you can see, our biggest holdings are, Nvidia, Microsoft, it goes Alphabet, and it goes AMD. Tesla was one of our bigger, holdings as well, but it's fallen, in price. And the other two that have fallen really a lot are good. Is NICE and Baidu, and both those were not very huge components anyway. Okay, so unfortunately, Tesla is the only of our big components that we have solid in price. But we've seen some of our smaller guys, like I said, like the ASMLs, the Nvidias, etc., doing quite well in the current environment. Okay, so overall, like I said, we beat our benchmark. Overall, we've done about 16+% in the last year in US dollars, which is twice the average return of the S&P 500. And I think, quite frankly, that looking at what the world is looking at the moment, or what doing at the moment, it's pretty clear that those with the best knowledge and the best brains are focusing on investing in AI. If that changes, we might change our portfolio. But right now, it looks all good. Any questions? Okay, I got one on the price to enter the portfolio. It's still $20,000 US. At the current interest rate, exchange rate, it's about 36,000 rounds. 360,000, 360,000 rounds. Okay, that is the current portfolio, or 380,000 rounds. So 380,000 rounds at the moment is the current thing. So 400,000 rounds will probably get you there in terms of getting entry to the portfolio. Now, there's a question here about a robotic company. Why don't we have a robotics company in this particular thing? Look, we do have Tesla, and I think Tesla is the part of the robotic systems that are going to be next. The reason I mentioned that $16,000 robot, because a lot of people talk about things like Boston Dynamics this, Boston Dynamics that. Boston Dynamics has probably the best robots in the world. Those robots are pretty useless unless you have an AI operating them. Okay, I don't need a robot to do backflips. The majority of the stuff that I would want a robot to do can be done by this 4-foot tall robot. I personally think that the one killer app when it comes to robotics is going to be cooking. Okay. I think I'm investing in the mega data centers links to AI. Yes, I am, definitely. Debbie, hi there, Debbie. But when it comes to the mega data centers, the question is, are they commoditized yet or not? And that is the thing that we're looking at this portfolio. There's things I can do in this portfolio that are probably going to benefit from AI. Things like copper, for instance. Copper is going to go up a lot. That's why BHP is buying Anglo's copper assets. Because copper is, if this stuff goes as we think it is, when you're going to be adding for a new data set, a new data center basically, as much power as you need to operate a state in the US, you're going to need cabling, you're going to need all the stuff, to build the chips, to build the machinery, all kinds of huge amounts of copper, okay? To generate the electricity, huge amounts of copper. But copper is commoditized, so it might give you a bit of a return. It might double in price or triple in price. It's not going to go up 10 times in price like we want it to. And that is the problem with some of these things. There needs to be some, how can I say, some super return that we want here. Like Tesla is probably going to give us a super return if things work out. AMD the same, Novartis the same, Baidu and Alibaba the same. Palantir, already done 55% in a year. So I do think that there is opportunity in those particular sectors. But I don't want to be, just going into some of these places where I don't know if there's going to be like this supreme added value, because, the internet took off. Cisco did not make a lot of money because what they did was commoditizable. And that's one of the things I'll be afraid of here. Okay. MU and SMCI, looking at these kind of things, and I will get back to you guys over the next little while about what we get into or not. Like I said, there's some stocks here that are borderline. Things like, for instance, Oracle and things like NICE are probably going to be things I'll be looking at over the next little while in terms of possibly, getting rid of. Much of the other stuff that we have, I'm pretty happy with. Even something like Apple. I cannot have an AI portfolio, not have Apple on the thing. Apple just, by the way, made a recent deal with OpenAI for their technology, and so we could be seeing Siri really taking off. Trust me, as AI-powered Siri would be a huge, boon for Apple. It could really change their the way they operate, especially if you consider the fact that Apple, unlike Microsoft and some other companies, have that history of protecting your privacy. And therefore, it really could be a valuable, addition, having this this extra bit of information from Siri, AI basically operating within Siri. And so, yeah, Apple I'm happy to have, even though it hasn't performed. And everything else we have has done really well, except for the Chinese companies, like I said, and Tesla. And like I said, I can't get rid of Tesla. I don't want to get rid of the Chinese companies. Intel, they're so cheap. They should have an advantage. They should have the ability to compete with the other guys. It makes no sense that two first cousins with Jensen Huang and his cousin over at AMD are able to do something that Intel, which has been around forever, you're just not able to match. So maybe Intel, I think, is something I'd be happy to keep on for a while longer. Hopefully they'll come up with something that's going to be interesting going forward. I know it's went off in price. I know it's done really well. I just am a bit nervous with that company, and therefore I'm happy with what I'm holding right now in the chip space. TSMC might be something to look at in the future, but we don't know yet. Okay. Anything else? Any other questions around the portfolio or AI in general? Oh, interesting one here. What do you think about nationalization? Yeah, I did see that podcast from that former guy from OpenAI. Look, if we are looking at a technology that's going to be as complicated and as high tech and as important as we think it is going to be going forward, and if Ray Kurzweil is correct about just how powerful it is going to be in 10 years' time or 15 years, 20 years' time, well, then you are going to have the threat that the government's going to step in and do something about it. Nationalization, probably not, because this is the US. The US is pretty, reticent to nationalize things. This was, for instance, in China, you would say, okay, yeah, nationalization is a possibility, but in the US, nationalization is unlikely to happen. That being said, regulation might be happening that maybe restricts the marketplace for these things. But trust me, many companies have made a fortune dealing with the US government. And once you have something that they need, they're a great customer to have, continuously paying you money, great credit, and, money always going up over time. So there is a threat of nationalization, no doubt, but I think the fact that many of these companies are US-based and the US system is more, open to the free market, the danger is not quite as high as you would have thought if it was only based in a place like China or something. Okay, is that it? Okay, so it's now 7:15. Thanks for joining me. These are mostly companies with exponential potential, but is it still worthwhile entering? Okay, so the price is too high. Okay, the question arising is that, is AI real? That is the question that you have to ask here. Is it real? Okay, if it is real, the price is not too high. If it's not real, the price is too high. The only way to know if it's real or not, I lack the brain power to figure this out. I think we all lack the brain power to figure this out. The only way to know if it's real or not is to look at what people with real money are doing and real access to information I don't have are doing. And right now, like I said, it looks like the people with the most money, the people with the access to the most amount of information, the smartest minds, are not just putting money into AI, they're putting the most amount of money. The amount of money going into AI in the next couple of years is more money than being spent on science, on everything else, everywhere in the world combined. That's going into AI. If this is a problem that can be solved, we will solve it, because the amount of money, the amount of brain power, the amount of attention this thing is getting is going to solve it. It's quite possible that there's a limit to what we can do with the current technology, and we don't have the brains that are smart enough to get to the next level, in which case, yeah, it's too expensive. But if you're looking at, like, the numbers from like our capital about what is possible around AI going forward, the example I give you is Apple. Until Apple came about, the idea of a $3 trillion company was ridiculous, especially for a consumer device like a smartphone. We're talking about 100 times the value of some of these basically car companies that have been around forever, like Ford and so on. But they're able to capture a new market and do things in a new way, that value was justified. Or if you go back to like older technology, look at when they invented the car compared to horse trading. The richest guy in the world became, it's going to Rockefeller, and he got into oil. Why? Because oil was the new technology, and the amount of money being made there made him the wealthiest man in human history under that point. In fact, probably if you look at it in inflation-adjusted terms, still to today. This new technology will create value on a scale that we don't understand, and if it is real, these values are cheap still. Especially for something like Tesla. Even in Nvidia, if you have the monopoly on creating the stuff that the world needs, being the second most valuable company in the world is not, at the level that you want to be worried about. Okay, so yeah, the question is not whether or not these values are too high. The question is AI real or not? If it's real, just buy these things. If they're not, then we can make a question about it or not. But right now, the information does seem to indicate it is real. Anyone else? And by the way, you want to be investing in these guys. You don't want to be investing in the smaller startups out there. Economies of scale are just not working in your favor. These things are really, really too valuable and too expensive for smaller companies to operate in. In fact, there's a recent example of a company that raised $1 billion that pretty much just shut down, because they would not have enough money to compete in the space. And you need to be buying these big, expensive items, not the smallest companies out there. They just don't have access to the technology that's going to take them to the next level. Okay, that's it. So what's going to happen right now is that this thing's going to go on YouTube. If you have any friends and so on that's interested, please feel happy to ask them to join and look at that there. If you want to get into the AI portfolio, give me a shout. Like I said, $20,000, just about 380,000 rounds, 400,000 rounds around about there, and you'll be in. And perhaps when you want to do it before they make an announcement about the coalition, because we've been MK ANC coalition, EFF ANC coalition, that $220,000 is probably going to be like 500,000 rounds. Okay. Cheers, guys. See you.